Hey guys, how are we doing? It's Crypto Insight UK here, bringing you back another YouTube video. Today we're just going to deep dive into this Twitter thread, and then we're going to look at another video. We're going to be mainly looking into liquidity. We're going to look at distributed ledger technology and like sovereign debt, basically. That's kind of in this first thread. And the second thread, again, is about liquidity. And I do think these push and aim towards Ripple's XRP, the XRP ledger, and potentially Ripple's Liquidity Hub product coming this year. But yeah, we're just going to dive into those things now. Again, guys, if you do enjoy the video, please hit that subscribe button, like, comment, and share it with a friend. And we're just going to get straight into it. It'll be probably about a 10 to 15 minute video because I've got 3 clips on this other video I want to share you, and I just want to read through this thread, and it has some clips in there as well talking about potentially, well, actually I don't want to break it, so we'll get straight into it now. So this is from Turd Deemstar. He said, I've followed the IMF for 15 years now, and this is the most impressed I've been by any of their live press events. Some rare truths were shared on a panel with Christine Lagarde, who's the ECB president, and Jerome Powell, as well as others like Kristalina Georgieva, who is the head of the IMF, I think. Yeah, I think so. So we'll just get into her clips. They're what I want to discuss, basically, because she brings some great points, and then we'll look right at the end at one other clip. So first, Miss Georgieva shares some hard facts, which is quite rare in itself for a spokesperson from the IMF. She talks about exploding government debt levels, largest increase since World War II, and how the current spike in rates may push countries in a pinch. So let's see what she's saying here.
First one is the issue of debt. In 2020, debt levels have jumped for an understandable reason, to put a floor under the economy. Largest increase since the Second World War in 1 year. In 21, it was easy because interest rates were low, access to financing abundant. For some, it was cheaper to pay for more debt in 21 because of this drop in interest rates. 22, different. First one is the issue of debt.
So she goes on to say that we're basically looking at sovereign bond defaults. Many governments are staring in the face of bankruptcy, and investors will have to accept a haircut on their government bond portfolios. This is what she means with restructured debt. Wow. So that means that, well, obviously sovereign bonds are where the government has borrowed money off a third party, like a private company, and for whatever period of time, 2 year, 5 year, 10 year, maybe 20 year. I don't know if it goes that far, but I know 2 year, 5 year, and 10 year definitely. And they're basically supposed to be the safest way of like earning interest on money, because governments always pay back their debt because they're governments and that's where the money comes from. But they're basically saying there's a potential that governments are going bankrupt and they can't even pay these bonds back, which will mean that private companies will be out of pocket, and we'll see what the repercussions of that would be in our financial system. But let's see what she says.
We have to help countries restructure debt early. And if we don't, down the road this year, we may be in a very difficult place. You talked about the 50 basic points. Just imagine what it means for emerging economies if, on top of it, their currency depreciates, which is also possible, and capital starts seeking the comfort of coming here to the United States.
So what she's saying is, what happens if you draw liquidity out of a country that is already massively inflating, and the currency is inflating, debasing, because they're having bankruptcy problems and they've got too much debt. This honestly is a massive proponent to crypto, specifically Bitcoin to start with, in terms of like wealth storage and easy access of wealth storage, because not only the government can get access to that in large proportions like they can with gold, but also the individual retail investor can get access to that as well. So there's a great point pulled up, and I think it's in this next clip on the next video I'm going to show you, where someone talks about how yes, the crypto markets are volatile, like you might see a 50% drop in crypto, but they're still very good for countries that have debasing currencies, like Turkey, for example, or Argentina. Argentina saw an 80% drop in currency in 1 year. So for Argentina, Bitcoin's not volatile because even if it comes down 50% and their currency's lost 80% of its worth, it would still be up 30% against their currency for that year. So that's where it is actually a really brilliant tool for like an international store of wealth. And the reason I talk about the XRP ledger specifically is because we have seen people talk about debt, sovereign debt. We saw in the Bank of England and the Chancellor of the Exchequer come out and talk about sovereign debt going on to distributed ledger technology, basically exploring DLT technology for sovereign debt instruments, which would be like bonds themselves. Then she goes on to talk about this.
The second issue, though, is that not all problems are exogenous. We still have plenty of problems that come because of poor judgment, bad governance, corruption. When Christine was the managing director here in 2018, early 2019, in these good days that we almost forgot existed, she would say, when the sun is shining, fix the roof. Mm-hmm. What we are now discovering is that many countries did not fix the roof when the sun is shining. Now it is pouring. The second issue.
And by that, what she means is when you're in times of peace or no problems around the world, you should be structuring your financial system, paying back any debts, making yourself as stable as possible. But a lot of countries haven't done that. And then we had a lot of like unforeseeable events like C-19, and we've had the Russia-Ukraine war, these sorts of things. And then it's like an extra issue piled on top of the financial system that was already weak. So imagine she uses the pun about fix the roof once if there's a problem when the sun's shining, get that hole fixed. And then because now it's absolutely pouring with rain, we've got all these problems and it's all coming in and you can't keep it out, basically. So that's what she's saying. And she goes on for one final clip here that I do want to cover, and then we're going to get on to the next video. She said, during the last moments of the show, Georgieva, as the last speaker, spoke a truth rarely spoken in an official live IMF setting, namely that the IMF's institutions are short-sighted and that monetary stimulus programs have been the unintended consequence of inflation. Sorry. Let's see what she says here.
We're tight on time. We have 1 minute left, but I do want to hear really quickly from everyone, including you, Prime Minister Motley. I sometimes get the best answers as a journalist when I ask people what we're not paying attention to, what the media or the world is not focused on. So I'll ask you just very quickly, either an upside risk or a downside risk as it relates to the global economy, what we're not paying close enough attention to, and what you would flag.
I think we are not paying sufficient attention to the law of unintended consequences. We take decisions with an objective in mind and rarely think through what may happen that is not our objective. And then we wrestle with the impact of it. Take any decision that is a massive decision, like the decision that we need to spend to support the economy. And at that time, we did recognize that may lead to too much money in circulation, too few goods, but didn't really quite think through the consequence in a way that upfront would have informed better what we do. And I subscribe entirely to what Christine said about climate shocks. We are already out of time. And the fact that whenever something hits us, we forget about this other crisis is incredibly troubling. The fact that I'm sorry I'm going on here, but I'll finish in a second. We act sometimes like 8 years old playing soccer. Here is the ball, we are all at the ball, and we don't cover the rest of the field. our ability to deal with more than one crisis at one time is very, very limited.
And she speaks such truths there. And I know that these financial situations and the issues that we've had globally have not been easy. But she's saying that we get very focused when we have one issue to focus straight on that issue and try and sort that issue out and disregard what may happen down the line because of this. And we can see this now, guys. Like, we're in a market now that I don't think we've ever really been in before. We're overinflated, both in currency and in equities. Everything's overinflated. Commodities, housing, everything. And everyone's like, it's calling for a crash here, there and everywhere. How can that happen? Because if the currency's overinflated and let's say the equity market crashes, it's only crashing in comparison to the currency. So people would be selling equities and coming into dollars, let's say. But dollars are already overinflated, so no one wants dollars. Do you understand the point that I'm making here? So no one really knows what's going to happen. We just know from the treasury bond spikes that we've had recently that something's going to break soon, because that's what they indicate, and it's our best guess at what that might be. And also, how are they going to get out of this problem? There's also a correlation that says that crypto could break out of its correlation against equities itself. So maybe we see some of that capital flow into crypto, because that would make sense, and it actually would stop this problem from occurring as easily in the future, because we have a finite amount. Obviously can't print more if we need it, etc. So it has its benefits in those ways. We also could, if we use something like the XRP ledger, we could free up $27 trillion from Nostro Vostro accounts for all these central banks around the world, bring in some more liquidity if that was something that we needed. I think that's a very genuine discussion right about now. Before, it may have been more speculative, but right now I think that there's a fair shout for something like that. I really, really do. And I just want to get over to this other clip before I finish off today. I've got 3 clips to show you off this, and this is some Crypto Alpha. It's only had 291 views, but it's actually from the Digital Summit by Crypto Compare, and we've got a speaker here from Ripple themselves, and I don't know his exact title. Let me see if I can quickly find out who he is for you, because I haven't timestamped that, but I have timestamped some other things. I don't know if I do timestamp that, but he works at Ripple. Here, this will tell you at the start. He is the global head of institutional markets at Ripple, Marcus Infanga, and we're going to listen to some of the things that these guys have to say now. So this is the first clip.
As liquid as traditional markets, and it's still fragmented, but we're definitely getting there.
That's good.
Can I just chime in here quickly?
Yeah,
So,
please.
in terms of describing the state, I feel something really key happened in this last adoption spur 2020, in the sense that, you know, crypto, in terms of just the market size overall and also volumes, have reached critical economic mass in the eyes of even the largest financial institutions. Before, it was predominantly retail driven, and now things like, you know, Bitcoin achieving 10% of the market cap of the whole gold market, or a company like Coinbase with, you know, with 1,500 people generating revenue commission income the size of, you know, traditional investment bank with 40, 50,000 people. It's just really open up the eyes. So it's fair to say, you know, in the eyes of traditional large institutional players, this place has become too big to ignore. No, it's not a fad. It's not going to go away anymore. And so all of them are looking for an entry now. And also regulators, which are obviously, you know, key stakeholders for the whole, you know, adoption to thrive. They can no longer ignore it. So as these two dynamics now are playing out, that will just underpin so much more liquidity growth from here, as I see it.
I mean,
So he's talking about obviously now the crypto market's not going away, that we are going to have more liquidity coming into the market because institutions are starting to recognize it as an asset class. That's where a lot of liquidity will come from, but also we need that regulation. Just going to look over my right shoulder and see where I've timestamped the next timestamp. It's 12:16. Let's have a quick look at that.
sorry, Marcus, did you want to make a point?
No, just quickly to chime into this question about where liquidity comes from, I would love to talk a little bit about this from the lens of sort of use cases. And, you know, I think everybody would agree most of the crypto liquidity right now serves sort of the use case of speculation, fueled by incentives and so forth. And not denouncing that, I think, you know, it empowers the industry to really innovate. However, I think as as crypto matures and lives up to its full potential, I think this notion of real world utility will become increasingly more relevant. And just to give you an example, so we at Ripple, with our flagship product, on-demand liquidity, we're literally harnessing billions of dollars of XRP liquidity to facilitate cross-border payments in a couple of seconds from, say, the US to Mexico instead of your 2-3 days like in legacy systems. So really solving a massive pain point in this world, which is how money moves around the world. And these are use cases that can scale in the trillions. So I think the future of crypto liquidity will be shifting more towards solving real world problems as opposed to just speculation.
Ignace, go ahead.
I think I agree with a lot of what Mark said, but I also want to challenge one point is that sort of like liquidity, or like utility is not here. I think, for people who live in mature economies where, you feel kind of like everything.
Sorry, I'm just going to interrupt him quickly because he makes a great point, which I did draw on in a second ago. He says utility is not here. And what the guy from Ripple was talking about is like institutional liquidity and liquidity in terms of financial sector. And then what this guy's talking about, I think he's from Bybit. I think he's saying that there is utility here, but just not in the respect that we're talking about. But it's a very great point, so I do want to play it.
Is relatively stable. You can afford to talk about crypto as if it's a speculative bet. But for people living in Turkey or Argentina, where the inflation rate is 50%, Bitcoin is not volatile. Even if Bitcoin loses 40% of its value, when you denominate it in lira, it's still going up. So, I agree with definitely the cross-border payment and in places like El Salvador, that up to 30% of their GDP is actually lost in cross-border payment because there are so many just like El Salvadoran diaspora working in other places and they need to send that money back, and Ripple is definitely having a use case there. But at the same time, for people who are living in double-digit employment rate combined with double-digit inflation rate, and many of them don't actually have access to bond market, don't have access to US stock market. Many of them don't even have access to US dollars. So crypto is serving a real need there, where it's the only liquid asset that you can trade globally. Liquidity, of course, it's scattered, but at the same time, crypto has this ability to move funds much more quickly than the traditional banking systems plumbing at T+2 days, whereas crypto, average block size of Ethereum is 13 seconds. It just moves the money a lot quicker, and then between exchanges, between different kind of service providers, it's much easier to go back and forth rather than instead of if you try to buy some futures of some commodity, you need to move through all those different layers, all those different institutions with all their internal checks and due diligence. Crypto actually allows liquidity to flow at a much more rapid and much more reliable and much more succinct way.
Which is a great point, and it's another reason why we need crypto right now in this economic crisis. We need to be able to move value around the world really, really fast. It just makes sense, and we probably will see some massive evolution real quick because they're running out of options at the top there. They're running out of options with the way that they've ran the financial system so far, and crypto really could come through and save the day. I don't want to be moon boy about this because it's still in a speculative cycle. We're still in that cycle because we haven't seen the main phase of utility and adoption yet. But how fast that comes, nobody knows. But I think it's knocking on the door right now. I really, really do. I've got one final clip I want to leave you with before I just sum up this video. And that is at 39:47, which is about here. Let's go from there.
More broadly speaking, one is regulatory frameworks and clarity, including for DeFi. We talked a little bit about that, so I'm not going into the weeds again. And the other one is technology and innovation around interoperability. So we at Ripple, we have this vision of this internet of value. So like a world where money moves around, like information moves on the internet today. You can think of it almost like a layer on top of the internet. And just kind of related to this question, will the future of crypto trading be on centralized?
Great, so it looks like my internet is having a bit of an issue, but he's just saying, will it be on a centralized exchange or a decentralized exchange? And he says, basically that doesn't matter too much. Oh, actually, it's loading now. Let's see exactly what he says.
Exchange or decentralized exchanges. And if you think about the fundamental technology, you would want to lean towards this decentralized world, and just thinking about this vision we as a company have as well. You would see a world where these networks, these value networks, are interconnected. Assets can freely flow around, and you see some of this happening with cross-chain bridges like multi-chain, all-chain recently integrated with the XRP ledger. And I think, it's pretty exciting to think about all the possibilities by connecting different value networks, and at the end, ending up in a situation where everything is tokenized. You can trade any asset against any asset, and there's going to be liquidity.
So we're heading for a world where everything is tokenized, and with that, guys, I'm going to leave you there to think about that, because that is coming. He's not the first person to say that. He's from Ripple. He's saying that. We saw Anthony Pompliano when he was speaking to Raoul Pal last week. They said exactly the same thing. So with that, guys, it's peace up, A-Town down for me. Let me know what you think of the video. Thank you for tuning in.